Hello, everybody. As I mentioned in one of the recordings in Chapter 1 this week, I forgot to do the marginal cost calculation example that I had intended to do. So I'm creating this separate little video to show you how to do this. So what I would kind of suggest is this example comes from Chapter 1, page 7, example 1.3. And I would suggest that you kind of take a crack at this yourself and then kind of compare it against my calculation here. So what we want to do is we have a lady by the name of Jane who is currently working, and she's making $2,000 a month. I'm going to presume that that's after-tax income that she has as opposed to pre-tax. And she's considering going to school for an 8-month period. So she wants to calculate her incremental cost, her marginal cost of going to school versus continuing to work. So at the moment, she's working and she has employment income of $2,000 per month. And her apartment rent is currently $700 a month. So I've set my little spreadsheet up here to show negative numbers as in red and in brackets. So she has income coming in of $2,000 a month. She has rent going out of $700 a month. She has personal expenses of $500 a month minus $500. She has a monthly bus pass costing $65 per month. So I'm going to enter that as negative. I already set some of my formulas up. Okay, so at the moment, she has net savings of $735 per month. So that's her income of $2,000, and she has expenses of $1,265. So she has earnings of $765 per month. So the alternative scenario is ceasing to work, having no employment income, and then going to school. So if she goes to school, she's going to stay in the same apartment and continue to pay $700 a month. So her apartment expense stays the same. Her food and personal care cost remains the same at $500 per month. And she's also going to take the bus to work, or bus to school, I should say. And so her bus expense will stay the same. So she has the same monthly living expenses as before, but she has no employment income. So there's going to be a net cost to her of $1,265. Either she's going to have to draw down her savings every month to the tune of $1,265, or she's going to get a bank loan or some kind of a loan on a monthly basis to pay those expenses. So if we just look at her employment and her living expense component of her life, we want to calculate the incremental difference between the new scenario of going to school versus the current scenario of working. So her apartment rent stays the same, so that's going to be new scenario, it's going to be new scenario minus existing scenario. So her incremental apartment cost is 0 because it stays the same in the 2 months. Likewise, her food and personal expenses stay the same in both months. So we're going to have the new scenario minus the existing scenario, and that's a difference of 0, no difference at all. Likewise, bus pass is going to cost the same under the two scenarios. So minus 65 minus 65 is 0. But we know there's going to be a difference in her employment income. In the new situation, if she goes to school full time, she doesn't work, so she's going to be short in the revenue of income of the amount of $2,000 per month, and that's going to show up in our little income statement here. Okay, so she's currently has monthly savings of $735 a month. And if she goes to school instead, she loses her employment income, and so she's going to have a net expense every month of $1,265. And the difference between $1,265 in net expenses, and current savings of $735 equals $2,000 per month. So if she goes to school, it's going to be for an eight-month period. And we're going to put 8 in. I like doing little spreadsheets, so I did a little spreadsheet model here. So we want to know if she continues to work, that's scenario B here. If she continues to work, she is going to have net savings at the end of this 8-month period of $5,880. And if she instead goes to school, the net cost to her for living expenses is going to be $10,120. So that's $1,265 per month times 8 months. And I'm going to carry that across. And then if she goes to school, she has to buy books and pay for tuition, because that's a one-time expense. So that's $3,600. And if she continues to work, obviously she's not going to have any school expense there. And the difference between those two scenarios is the cost of going to school, the $3,600. So if she continues in her current situation and continues to work, at the end of the 8-month period, she'll have an increase in her net savings of $5,880. And if she goes to school instead, her net cash outflow during that period is going to be $13,720. And so in the example in the book, Jane calculates her incremental cost of going to school to be $13,720. However, what she's obviously not factoring in is her lost revenue of $2,000 per month. So when you factor in lost a revenue of $2,000 per month, that's $16,000 in total. Her total marginal cost of going to school is the difference between her existing scenario of net savings of $5,880 and the new out-of-pocket expenses of going to school of $13,720. And so the net difference between those two is $19,600. So $19,600, that is her incremental cost of going to school. Extra school expenses plus her lost revenue or lost employment revenue. So the net employment cost, or the net cost to her of going to school, is $19,600. So that's quite a bit higher than her calculation of only $13,720, but she's forgetting to factor in her lost employment income. And of course, although this sounds quite high, $19,600 over an 8-month period sounds quite high, no doubt she's looking at her investment in schooling as just that, as an investment rather than an expense. So yes, you got money going out today, but she anticipates having higher employment income down the road. So maybe when she's done school, she's making $3,500 per month. And so eventually this investment will pay off. Anyways, so that's her marginal cost of going to school for 8 months rather than continuing to work for 8 months. Her marginal cost is $19,600. Okay, so that's it, and we'll talk to you later.